Alan, Darby, Jacqueline, Martinez. This is the buyer's boardroom. Learn the most about who you are today and where you want to be after.
The information presented in this episode is for informational purposes only and should not be construed as personalized investment, tax, or legal advice. The views expressed are those of the podcast host and guests and do not necessarily reflect the views of Savant Wealth Management. Savant did not provide or receive compensation for participating in this podcast, and remarks made should not be interpreted as an endorsement of Savant or its services.
Welcome back to the Buyer's Boardroom. You've got Jacqueline Martinez and Alan Darby. How's it going, Alan?
Doing great. This is looking forward to this. This feels like it's been a while since we've done a podcast, so I'm looking forward to getting it.
A lot of exciting content, been busy with deals, which creates a lot of interesting things to talk about on the podcast.
Yeah, it's the standard sort of year-end push. Not as difficult as in previous years where there's some kind of tax thing looming that everyone wants to get a deal done before year-end, but still it seems like the year-end is always super crazy, particularly for you since that's your side of the equation at Lawler. But all is good. So no, this is going to be a good one.
Yeah. I know with all the deals that we have post-LOI, thought today we could dig into what that journey is like after the LOI, because I think there's always just so much excitement when you sign the LOI. It's such an important milestone, of course, but it's like the work is far from over and there's a lot of opportunities for things to go awry as well. So
yeah. It's funny because I think if I look back over the 100 some odd deals that you and I have been involved in, I think maybe 2 have broken up post LOI. So it's a very low probability that something is going to go bump in the night. Maybe better stated, that the deal is going to fall apart because a lot of things go bump in the night after the LOI. But for me, signing the LOI, while it's exciting, it to me is also the most like trepidatious time period because like you said, it was like we're dating, and the LOI, while it's not signing of the purchase agreements, it's like getting engaged. Like we're saying we're going to get married. And now the work of planning the wedding and all that stuff comes in. And maybe sometimes that's fun, but there's a lot of stuff about the post LOI workflow that is just not fun. And you're getting the deal people on the buyer side are often stepping back, and they tend to be the more charismatic, frankly, the sales component of the transaction. So naturally, they're more in tune to managing emotions and being super friendly and all the rest. And now we're dealing with the people who are actually doing the work, who are not on the quote deal team. And so it's a very pragmatic, sluggish, we got to get all this stuff done. And emotions can run high. People can get just burnt out and things happen. And so it's, for me, it's the part where we're all excited because it's certainly a big milestone in the overall deal flow, but I'm not resting. The deal's not over. There's a lot of things that got to happen between the LOI and the signing of the purchase agreements. And that's what I wanted to talk about because we've had a few really interesting things occur over the last few months as these sellers are entering this post LOI workflow, and so we're gonna tell stories. And frankly, just pre-warning for all those listening, it's probably going to feel like we're beating up on the sellers as we go through this and taking the buyer's side. You know, that's not what we're trying to do. But the reality is, wouldn't you say, where the problems arise post LOI, if I were putting a percentage on it, it would easily be like 75% on the seller side. Not
the seller doing things that they don't understand, like when they're acting from emotion instead of logic, that can unknowingly signal that they're not ready, or it can signal red flags that may or may not be there but it's usually stemming from an emotional place, a fear-based place often. As things are getting more and more real, as you approach signing the purchase agreement, it's also, to your point, getting more and more tedious, all of the work that needs to be done to get there. And
we try to prep them for it because I think they think, because it is, to get to an LOI is such a lot of work that they probably in their minds think, oh, this is basically done. Right. Even though we've never said that to them, and we've in fact told them very early in the process that the post-LOI workflows are the most challenging aspect of it. They, I think, are surprised at it. And so emotion and deal fatigue, all those things really kick in. I'm also super excited about our guest today, Patrick Lawler, head of M&A for Savant Wealth Management. Known Pat for a long time, consummate pro. He's certainly done a lot of deals from the buyer's perspective and can give great insights as to what makes them nervous about seller behavior, even though they would not have signed an LOI with someone that they did not think was a great fit due to all the work that they'd done to get to that point. But what are some of the things that he's seen over the course of his career that made him go, maybe we didn't have the culturally aligned partner that we thought, given the behavior that the seller is exhibiting post-LOI. So super excited for him to come
Me
on.
too. Yeah, I love working with him. We've been able to do 2 deals with Savant now, and on both of them, just him and the entire team really at Savant have been a joy to work with, and just a delight every step of the way, even through these tough spots post LOI.
Yeah,
There always are.
They're
Yeah.
very dialed in. Maybe let's share, what is the purpose of the LOI? Because I think there's some misunderstanding as to what the LOI even is for. So maybe give me some feedback on, like, why do we even need the LOI? What does it signify in the process?
I would characterize it as it's an important milestone because you're capturing ideally all of the key business terms of the transaction. So any like major mechanics around how the price is going to be allocated. So you're agreeing on the fundamentals of the deal, the price, if there's employment terms, that would be in there, how the price would adjust based on retention and growth over time, those types of things. And it's at a point in the relationship where both sides have heard enough to feel like they're a match, but there's still a lot of work and diligence to be done on both sides. Maybe visits to the buyer's headquarters haven't happened yet, or to the sellers, and a lot of work still needs to be done. But having a signed term sheet or LOI between the two parties starts a flow of resources being dedicated towards next steps. So it's like everyone having comfort. Okay, now's the time to bring in lawyers. Now's the time to bring in my transition team to really prepare for this and spend more meaningful time together if we know that we're aligned on basic business terms.
That's great. It's almost like a trigger, right? Mm-hmm. It's a triggering event. It's, one, to your point, it crystallizes what everyone basically thinks we've agreed to in terms of deal term, deal structure, economics. So it puts it in legalese so that we can all say, yes, that is what we think the deal is. We agree on that. There's usually some commentary about go forward expectations, like the vision of what the buyer sees in the acquisition of that partner. Maybe some commentary about roles and responsibilities about what they might be doing in the future. But it's really a trigger that says we have a serious potential partner here. And to your point, that sets in motion, let's say, the marshaling of resources. Not that resources and money haven't been spent by both sides at that point to get to the LOI, but it's now we're bringing in the heavy guns, lawyers, accountants, and we're from the buyer's perspective, and this is something that I want the seller to understand, they're now going to spend real money, meaning sometimes, like, for example, many buyers want to run a quality of earnings report, which is basically like a mini audit of sorts of the revenue. And they are going to hire an external firm to do that, an independent accounting firm. Those things cost 25, 50, 100 grand, depending on the size of the engagement. That's the buyer's responsibility to pay for. They're going to engage legal counsel. The seller is going to engage legal counsel. The buyer has a transition team. So these are full-time resources that they're paying for that they're now going to allocate to this deal. And so if you were trying to put a number on it from a buyer's perspective, what would you guess the buyer is typically going to be spending during this LOI process to get to signing of purchase agreements?
Like of external vendors involved, like including legal and everything, at least call it 200 grand.
Oh, yes,
Yeah.
that's what I would have said too.
Yeah.
So that's the seller needs to understand that that's the buyer's financial commitment just to get the deal closed. Just
Mhm.
not to get the deal closed, to get the deal signed for purchase agreements. And it's a significant thing, but that's the purpose of the LOI from the buyer's perspective, is a trigger that says, hey, we have a real deal. We're going to start spending real money and real time and resources heads down to get it across the finish line. And that means signing of the purchase agreements. Okay. So that's the purpose of it. And to your point, it's often non-binding. I would say the majority of times it's non-binding. So both parties can walk away from the transaction really for any reason that they feel is warrants not going forward. It's a significant milestone. And I will say this. So the buyer is going to start doing really 3 workflows: transition prep. So they're going to have their transitions team start to work with the seller's team to get all of the, let's say, the ducks in the row to facilitate the transition of clients, all the paperwork, custodial work that has to be done, that sort of thing. Then they're going to fire up their legal to start working through purchase agreements. But then they're going to start doing formal due diligence. And this often sellers get really surprised at, is because they've already provided like tons of information at this
Yes.
point: financials, client segmentation reports, staffing, vendor contracts. All of this stuff has been provided. And sometimes they're surprised, like, what? Wait a second. Now we're going to be doing, I thought that's what we've been doing for the last couple months.
Yeah. It feels very redundant. And then you think about, not only have we already talked about, but now it's almost every new person I interact with at the buyer's organization, they're going to ask their version of the same questions as it's specific to their department too. So it just feels like Groundhog Day a lot of times, of asking the same things. And then when you finally get through due diligence, then you have the purchase agreement. And now we're scheduling in the disclosure schedules all the things that we've been talking about for months and months. Now we need to write it all down. So it's like when we get to that step, then it's like, really? Like, they already know this. But what's important is that it only really matters what made it into the disclosure schedules, not what you've said verbally to the buyer. And that's where it gets so tedious and annoying. And I think that's where at that same time you're working through the purchase agreement too, while feeling that it's redundant. And I think that's where emotions come through.
Yeah, sometimes the seller, I think, feels like they're being asked to produce information that's inconvenient, hard to obtain sometimes, and they just don't understand the need or the rationale. So I know you do a great job. I think it's one of the things that you do wonderfully amongst many, Hammer, is helping them understand why these specific things are being requested, why they're important, and how to prioritize getting those things in. But they're not asking for data just for the sake of asking for data. Keep in mind, they're likely writing a check that can be 10, 20, 50 million dollars and more. And they want to make sure that what the asset that they think they're buying is actually there. There's nothing problematic with it. And if there are things that they uncover, they may be willing to work through them, but at least they want to know about it going through that. So that's what the LOI is and the workflows that are coming in. And I would say, what do you think? Probably 45, 60 days to get through the LOI, post-LOI cadence to when you're signing purchase agreements?
Yeah, that would be probably best case scenario to plan on that. And then it's a lot of it is the speed of providing information from the seller side, then buyer reviewing it. And so the sooner you can provide it, the sooner they can review it. But as you add a week here and there, that's where it can go longer. But my advice too for sellers going through it, as you look through the diligence list, it's yes, everything is important, but oftentimes you may have something that's easier to provide that's 85%, 90% of the way there of what they're asking for. And so and rather than sending your team off to do hours of work to get everything perfectly how they're asking, is to like raise that with the diligence team and say, we have this, could this work instead? What you're asking for, we can totally do, but it's going to take a lot of resources, and try to compromise on certain things. And oftentimes, depending on what it is, oftentimes there's a balance there of what in a perfect world they would receive, but balanced with reality and what's easier to provide. So I really advocate for those conversations
And
too.
that's a good point. So let's say they get a due diligence list, and I'm just making a number up. Say there's 50 things on it, it's probably more. Do you recommend that they go collect all 50 items and then submit them all at once? Or
Yeah.
as they can produce them, get them in the data room so that the buyer can start working on it immediately?
Yeah, that's a good question. I would say provide it as you have it. The inclination can be to hold everything back until you have it all perfect. So it's definitely like a progress over perfection concept here where keep funneling it, but their teams are likely to not review it until you say that you're done with a certain section. But buyers should help you with prioritizing. Usually it's compliance things, financial things to get the QOV started, help make sure that they're prioritizing for you what's most important. And then once you've done as much of a section as you can, then let them know and upload it as you have it. It just helps it keep moving versus if they give you the diligence list and then 2 weeks later there's nothing in the data room yet, that kind of can send a red flag to the buyer that you're not starting on it when really you've been hoarding it all in a folder, all nicely organized, but you're just waiting for one last piece. Just upload it as you have so that they see the progress.
100%. And we've spent a lot of time on our podcast talking about emotions on behalf of the seller, but buyers are humans too, and they can have emotional reactions to things. And so to your point, if they give you a diligence list in 2-3 weeks, and we've seen this, we know they're working on the diligence list, but the buyer often doesn't. Sometimes we have to take the call, like, where is the diligence information? Are they on vacation? Or they don't care? Are they serious about doing this deal? Why? And we have to tell them, no, they're working on it. And so I think to your point, getting what information you have as complete as possible, but getting it into the data room earlier lets the buyer know that, hey, we're working on this stuff. Yeah. And to communicate with them. Typically, you get like a weekly meeting that's taking place, and you can have these discussions. But the seller needs just to be aware that they're not only being asked to produce all this stuff, but they gotta be aware that they're managing a buyer, their expectations and emotions as well. Mm-hmm. That's really important. And okay, let's talk about some of the things not to do.
Story time.
we did a podcast on the transition fully. So if people want to know like more about what the steps and all the things that are happening during the transition, so it is. But I think Michael Belomini,
Carson, it was the earlier one. Yeah.
So you can go listen to that one. But we just wanted to talk about some things that we've seen from sellers, and it's in their mind justified and like they're conducting reverse diligence, let's say. But the way that they went about it didn't feel really good. There's the one example we have where we had a seller and they wanted to talk to partners that had gone before. Now, keep in mind, as a part of our process, before the LOI, we typically have the seller talk with at least 2 to 3 partners that have done the transaction with this buyer, and they have one-on-one conversations. And so that's a part of our standard process anyway. But this specific seller, without telling us, decided to go deeper and start doing like secret shopper type behavior and randomly calling partners all over the country, asking about questions that, to him sounded quite normal and rational, but it wasn't the fact that he was calling and talking to partners, but it was, he didn't go through what we would consider the proper channel. Notify the buyer that, hey, I want to talk to a few more partners. If you just maybe point me in the right direction, or just be aware that's my intent, and get their feedback. But he didn't do that. And so we get a call one day. It's like, what the hell is going on? This is the deal team from the buyer. It's like, we're getting calls from all of our partners that this person is calling them
repeatedly.
Like, yeah, that's a great point. He wouldn't just call him once; he'd call that person multiple times. And just imagine how you would feel like if you were going into, let's use like maybe a marriage analogy. 2 partners are getting together, and you get engaged, and one of the partners just starts calling all of your ex-boyfriends or girlfriends,
right?
just peppering them with questions without telling you about that. That doesn't. it doesn't really give you a good vibe about how this person, they don't trust you. Like they don't, and there's something foundationally wrong. And the key point is I don't have a problem with you wanting to talk to partners who've sold and gone before you. And those are some of the most productive calls I think you can do. It's just the way they did it, the just not letting anyone know or asking permission, frankly, because these are employees, partners of the buyer. They're busy, they're working hard every day, and they're being interrupted, frankly, by this person they have no idea about. Whereas if it would have been gone through the right channel, the corporate development people could have prepped that partner on who this firm was, what they saw in them, given them some of the pros on why they're interested to partner with that seller to begin with. Probably would have been a whole lot more productive conversation and not triggering any red flags on behalf of the buyer. It's fine to conduct reverse due diligence, and we're very active in helping you do that. But have a little bit of awareness about the way you go about doing that could send the wrong message if you're trying to do it like covertly without them knowing it. And that's something that raises the bigger issue is you're joining a new family here. You are getting married. And so the way you go about things is often my wife will get mad at me for something I said, I should rephrase it, not what I said, but the way I said it.
It's how you said it, Alan. Yeah.
And so I'm like, why are you mad at it? She's projecting something that in my mind wasn't true. But as I reflect back on it, I can see how she might have thought my intent was different, just the tone of the way I delivered it. So if you're going to do reverse due diligence and things like that, let's go through the proper channels. We don't want you to be,
Yeah. And then prepare in advance, have all of your questions and really try to get it all done in that call too. Like this specific example is a stream of consciousness calling whenever the question came to mind. And trying to really value the partner's time that you're talking to and make that call the most meaningful. And not to say that you can't ever call again, but just get it in there. You don't want to be viewed as a terror.
Yeah, that's a great point, because people are typically on their best behavior when you're dating. And so if you're being, to use your word, a terror in the dating phase, they're extrapolating, this is only going to get worse. And buyers, we keep saying this over and over again, buyers are incredibly concerned that any transaction they do is going to be a distraction to their existing team. If you have bad personality, bad attitude, non-trusting, constantly questioning everything they do, they will say, we just don't want, this person is not going to be additive. They're going to be a detraction to our team. Which leads me to another point. And this is actually more common is, okay, so we're going to do all these transition meetings, right? And usually it's not the owners of the business that's selling that are in or leading these transition calls. It's often their team, their employees.
Right.
And it's at least once a week that they're on these calls, sometimes more. Absolutely. And in between these calls, the team is being tasked with a lot of work. So let's just be honest, it's a pain in their neck. It's a pain in the seller's team neck. So it's not surprising that they would be frustrated or tired or things like that. However, we've seen this a lot where someone on the seller's team has an attitude problem, change resistor, rude. And keep in mind, the people that they're interacting with on the buyer's team, that's going to be their teammate, assuming they transact. I think sometimes sellers perceive this as like a custodial change or move. If they've gone from Schwab to Fidelity or Pershing to NFS or something, whatever, it's like they're used to that. They've done a few of those before. And the person on the other side of the phone is a vendor to them, basically. Mm-hmm. And they can be a little chippy with them or cop an attitude. And what do they care? That person works for me. They're providing a service to me, and I'm going to give them a piece of my mind. That's not the case here. In this case, it's going to be your new teammate. It's like your employee that sits in the cube next to you or down the hall. That's this person that you're talking to. Right. And so we've seen it a lot of times where there is a person on the seller's team that is giving attitude or being rude to the buyer's team, and the owner is like completely unaware of it because they're not on the calls.
Or allowing it.
That's a good point. Yeah, they know about it and they're not doing anything.
Yeah.
And we've seen, fortunately, it hasn't happened, but we've had buyers just outright tell us, if this doesn't get corrected, we're walking from
Yes.
this deal.
And like that one situation of that I'm thinking of, the what this person was projecting on calls, it was really all rooted in all the right things, that they care so much about the team and the clients and not wanting to, it's all coming from the right place, that they want everything to go well, they want everything to be smooth, and they're just nervous and detail oriented and have a lot of questions. But all of those intentions weren't coming through. It was coming through as being, like you said, a change resistor, negative, that sort of thing. I think the best way to handle it is on the seller side, the founder meeting with that person individually and just really try to unpack all of those things and give the list to the buyer of, these are the things that this person needs more information on, and let's put our arms around them and give them all of that information. And then two, it's on the buyer side to say, try to unpack and get to a constructive place. And maybe it's time for an in-person visit and go to dinner and like break down the walls so they understand, like, we're all just people working through this together. We're all going to be on the same team, and no one's trying to do anything that's going to disrupt the client relationship or that employees come over unhappy. We're all on the same page with that. Just separating any of those fears that maybe don't need to be there from answering the questions and getting to the point of clarity.
And the seller, the owners, you know who these people are on your team. Like and I'm not saying they're bad people. They're working for you. And I've seen many times, like, the most change resistor team member is probably one of the longest tenured people on the team. And this whole transaction is freaking them out. And so there's a bit of that, and that's understandable. We try to get ahead of that very early in our process to let the team know, hey, your job's not going away, your opportunity's not going away, all these things you're in the back of their mind, but you know who they are. And so if you have an idea that someone who's going to be heavily involved in this transition has had this type of personality in the past, you may have a sit down with them as you go through this and be like, look, if you're going to vent, if you're going to have an emotional freak out, please don't do it on the phone with our new partner. Get offline, come yell at me. And then I tell the owner, you get yelled at by your employee, and then you come yell at me, and we'll all just let you vent together and get it out of your system. Don't do it to the buyer. Now, if the buyer was doing something problematic or they were being rude or things like that, I've seen that one time.
Yes.
Where we had a problem with the buyer's person, and we ran it up that food chain, and that employee was terminated. But so anyway, if you make sure you're aware of change resistors or personality issues on your team, because they're going to be dealing with the buyer's team, and try to manage that. I would say something else that we've found helpful is let your team know, hey, at the end of this crap sandwich that we're asking you to eat, there's a bonus for you. There's maybe a trip or something, an incentive that we can give to you that is like a reward for going through this process. We've seen that happen many times, where the owners decided that, hey, for all the hard work we're asking you to endure that goes beyond your job description, we're going to give you a little perk or something like that at the end of it, so that you have something to look forward to. I think that's a classy move and something that's been received.
Absolutely. Yeah. It's rare that even the admin level employees are not getting at least like 5 to 10,000 at the end of the closing, getting through that. It's become the norm that and that can be something too that you negotiate with the buyer to like offer as part of the deal, or you can handle it through the closing cash. But yeah.
Very good. So any other weird story that you had that you would want to share? Those are the two.
When you were talking about, I guess when we were just talking about how the diligence request can be like really cumbersome to put together. I had a deal recently where they're a firm that was on a corporate RAA. So the systems and everything were really hard to extract the right information out of it. And it became a very manual process that we supported them in. But as we were pulling teeth to get the reports out of the seller to be able to put together the request, there were a lot of comments of, And it was all stemming from how difficult it was going to be, like out of their control, really.
Yeah.
That's where it was. Not like that they're not willing to do the work, but it's just very hard to do. And basically, refusing to pull the information and saying that the buyer should trust them on the revenue amount that we were talking about and trying to verify. And I think there's a lot of things in this that we're all trusting one another on. But when it comes to validating revenue,
Writing a multi tens of millions of dollars,
yeah,
trust, we can't rely on trust.
we can't rely on trust. Exactly. So
Well, keep in mind, sorry to interrupt you, but keep in
no,
mind,
you're good.
the buyer has a capital provider,
Right.
right? That has constraints on when they can write a check. What are the things that they have to have in order to gain approval to close? And
Revenue.
exactly. And so
Yeah.
I can understand in that case where it was very difficult for the seller to produce the revenue that the data that they were being asked. But that wasn't the buyer's fault. They had a business structure in a custodial relationship that it was just, they had poor data, right? And so they're getting upset with the buyer for requesting it, but it wasn't the buyer's fault. It was their, I'm not saying it was the seller's fault. It was just a result of the structural business that they had set up. But it doesn't mean that the buyer can relent. It's like they have to have this data or they will not be able to get the check from their capital provider to close. So understand and have a bit of empathy for the buyer. Believe me, like they're not asking you again for data just for the sake of making you do work. That's the last thing they want. You're their partner and they know you're going through a very difficult time, challenging time, and they're going to do their best to help you get through it. They've got to have the data or else they can't close. And so have a little awareness about that. Again, go outside, smoke a cigarette, have a beer, something like that. Just take a jog, whatever it does, just relax.
Whatever works for you.
That's right. That's right. All right.
Well, I know
Good.
we've been so focused. But I know we've been very focused on all the requests of the seller, but I think, and that can be overwhelming. But it is also the seller's opportunity to request things from the buyer. So I think it'd be helpful to talk through a little bit of the dance. So we sign the LOI. Seller's going to get a big due diligence list. Then it's important to make meaningful progress on that before you're then asking the buyer for information about their strategic plans, their financials, particularly if you're taking equity in the deal. It's completely reasonable to want to understand the latest valuation, the solvency of the company, all of these things.
Yeah, so I know exactly where you're going to, because we've seen it before where they're like, we'll give you this data when we get that data from you. And what a horrible way to approach that. That is a non-starter in talking about something that will really turn off a buyer. Because again, it's amazing to me, how like when the seller, we agree to the deal, we've signed the LOI, and we're marching towards this purchase agreement, that the seller almost takes a position of, you're so lucky to get us. And how dare you ask us for all this information and before you give us your information. And it's like they totally forget this buyer is writing a $50 million check for this business like that. That's like nothing. No, it's like I think what you're saying is you're going to get to your reverse diligence. It's perfectly reasonable and smart to go through your reverse diligence with them. But let's give them their diligence requests first so that they can be working on that. It's a good faith gesture. And then as you've given them a good amount of data that they've requested and we're well moving through the process, now let's start asking for reverse diligence. You're going to find they're much more receptive to that than if you say, we're not populating your data room until we get XYZ from you. That's not a good way to go about it. So great point. All right. So looking forward to the interview with Pat Lawler. It's going to be fantastic. He's got a lot of work on the topic. I'm sure he's got some stories to share as well. Alan Darby with Patrick Lawler, head of M&A for Savant. Patrick, welcome to the Buyer's Boardroom.
Yeah, thanks for having me, Alan. Appreciate it.
Yeah, well, we're super excited to have you on. I've got a really interesting topic today that Jacqueline and I were discussing. After recently we've had just a few interesting things happen post LOI. The letter of intent is a milestone, and we'll talk about that event in the progression towards deal completion. But there's a lot of things that can happen in the post-LOI cadence because it's not so fun. It's a very granular time, a lot of work being done. And so we have a few interesting things that have occurred, and I'll share those with you and also have some questions. But before we dive into that, maybe let everyone know a little bit about yourself and who Savant is. We love working with Savant, done a few transactions with you guys, and appreciate what you guys are doing in the industry. But let everyone know a little bit about who you guys are.
Yeah, no, I appreciate that. Yeah, so Savant Wealth Management started outside of Chicago, about 50 miles northwest Chicago, a small town called Rockford, Illinois.
Yep.
Brent Brodesky is our founder, still our CEO. Started when he was like 23, 24. He finished his MBA program and started the firm, and really just kind of built it to, fee-only firm. Built it largely organic for, I would say, the first 15, 16 years, and just started building organic, primarily centered in the Midwest, and then did some partnerships on the East Coast, and we've just grown since then. So now we are $38 billion, probably going to be upwards to $50 billion by the end of January.
Wow.
With a couple of large partnerships that we're working on right now. And really did it by doing a lot of the blocking and tackling. We've got a great platform. We have a tax and consulting division that Accounting Today had us listed as the largest integrated tax and accounting firm in the country. I think we got about over 100 employees in that area.
Yeah.
That have 11,000 tax returns. So just doing largely a lot of that. That's how we've been able to.
Yeah, there's a lot of things I think about when it comes to Savant, and you guys are excellent in all of them. But one of the aspects that stands out is this surrounding of the client with multiple services. You think about financial planning, portfolio management as the two bedrock services, that 360 wheel of additional services. You guys have done a fantastic job of integrating a lot of other things that make the advisor more compelling, in terms of their value prop to their clients. So
yeah, no, it's been I think Brent had the sagacity to kind of build this 15 years ago, exactly like you said, the Mayo Clinic model, where the client is in the center, the financial advisor is the quarterback, and kind of just surrounding them with a team of experts. It's definitely resonated.
Agreed. Okay, so let's dive in. And so the first question that I have for you is really, what does the signing of the letter of intent signify? By the time you have a firm get to the point where you're willing to even put forth an LOI, you've likely spent a lot of time, whether you've self-sourced the opportunity or working with an advisory firm like an Alaris. There's a lot of work that's been done. And yet here's this document that we're putting forth to the seller for them to execute. Often it's non-binding. But I just want to hear it from your own perspective. What does that signify to Savant?
Yeah, I think for us, it's really kind of, we've done maybe some 30,000 foot view, due diligence, and everything there. The next point, when you kind of use that as like the line of demarcation, you go much deeper into the due diligence and really trying to get a better handle on the firm, how they've been operating, their employees, things like that. And so I think we're clients or sellers, I should say, maybe don't realize the amount of work they're still maybe ahead of them, right? So they probably whittled their list down, and then they said, you know what, we're going to go exclusive with Savant. There's still a lot of work that needs to get done to get the deal consummated.
Yeah, Jacqueline and I were talking previously about how sometimes they're surprised when we tell them, the LOI is a triggering event, and it's a 3-pronged process: legal, transition, preparation, and due diligence. And they're a little bit surprised that, wait a second, due diligence, we've been giving you tons of information already. But the reality is it's you got to confirm all of the information that you've received. If you've self-sourced it, you want to get deeper under the hood. If you're working with an advisor, you want to verify all the information that they've received. So it is a surprise, but for the way we kind of position it to them, and what you said echoes that, is that it signals to you that, hey, we've got a serious potential partner here that's willing to sign a legal agreement, which has a standstill provision in it, and really go, head down to see if we can get a deal done, get it across the finish line, and so that's a trigger. You guys are going to be marshaling resources, correct? Like it's not as if you haven't been spending time and effort with them to get to the point of LOI, but you're going to take it to the next level, right? Like, so maybe let the people listening to this understand what you guys are going to start doing post LOI, either internally, hiring lawyers, hiring accountants for a QV, or this kind of things. Let them talk to that a little bit.
Yeah, no, it's a great point, Alan. Yeah, we call it confirmatory due diligence as well. So it's really, we're obviously a little bit larger than some and smaller than others. So we've got a dedicated team of people on the M&A team. So we're allocating a lot of resources there.
Right.
Then we also have functional team leaders that we'll pull in to have conversations, because it's not just, buying and trying to aggregate. We're one firm, one brand, one vision. So we got to make sure it goes right. And so we fully integrate everyone. So we have a lot more discussions. And I think that's where sellers probably don't really realize that, oh, wow, because there's a human component, right?
Yeah.
They've got employees. You want to go through and find out, right, let's map make sure that we're in a good trajectory for their employees to have, great career with us. So there's a lot there. And then as you conveyed, depending on whatever size the firm might be, there might be a quality of earnings where we got to get an outside third party accounting firm to go through and to go through their financials and to make sure that the EBITDA that we're using is in line with what it's stated. And then obviously having the attorneys involved, and any other outside professionals. If they hired a firm like you guys are great. You get them organized, you get them ready, and everything along those lines. Sometimes if they didn't hire someone, it's really hard for them. Yeah. So there's an emotional component there as well. So I think it's just a lot more for them to go through and to do that, even though they might have given you the information.
Yeah,
you go deeper with a lot of 2 clicks down, maybe.
That's right. Well, to quantify it, because this is a significant milestone, we were trying to estimate what we thought the average buyer would be spending in terms of dollars, with no assurance that you're going to have a deal consummated. And we sort of thought it's probably around a few $100,000 when you think about the external cost, the internal cost. So it's real money that you guys are spending to go through this process.
Yeah, even small firms, it's for even for smaller firms, we're spending at least 6 figures on the low end, for sure. If it's a larger firm that has multiple locations, Alan, we are in talks with a firm that has locations in 3 or 4 states. We were flying a lot of our executive team to the different locations. So when you figure just not only the costs of flying and doing these meetings and having it over multiple states, it's the cost of pulling people away that maybe have other jobs.
They have a day job to do, right? Yeah. So okay, so that really helps kind of set the stage for what is the LOI to you, the triggering event, and really signaling that, okay, we have someone who's serious to potentially be a partner with us, such that we're willing to spend that money, again, with no guarantee that we're going to close. So now we're going to get in some of the interesting parts about it. It's the reality that I always tell people, doing a transaction, it's an intellectual exercise for sure, right? But it's equally, if not more so, emotional to go through. Obviously, it's a massive transaction. You got your team, your clients. It's probably your largest asset in your net worth. So there's a lot going into this, and so emotions can come out during this, we were candid, like the dating is sort of over, the fun part, the whining and dining and all that stuff. And now we're rolling up our sleeves and going through good old due diligence and getting lawyers and stuff involved. So through that process, we've noticed that sometimes, there can be some personality issues arise, whether it's with the owners, it could be with the staff. Like, what are you watching for that as you interact with them and multiple points of contact with them through this process? And, what are you looking for in that regard?
Yeah, no, 100%. It's a great point. Yeah, we are watching it very closely. We're in this for the long haul, and we own, the employees own 70% of our cap table, so we want partners that are going to be around for a while. And you are right. There's a lot of stress because they're trying to run a business. They're also trying to sell their biggest asset, and there's a lot of different externalities that are coming into the process. We looking for it. If somebody is rude, is it? We always kind of will look at it as, are they having a bad day, or is there something else going on? If it's repeated or something like that, disrespecting people's time or something like that, that's a character issue, and we've cut deals off a few times because of that. It's how are they treating people? They might treat me differently than they do someone maybe below me on my team, that they might be doing something that's unacceptable. Is it someone having a bad day? I mean, because it happens. This. You've done as many as anyone in the industry. Are they having a bad day, or is this something that is kind of repeated or a character issue?
Yeah,
those are things we look for all the time.
Well, I think it's getting it's amazing that they don't grasp this as quickly as I would think they would, but they liken it to joining another custodian. Many times they've gone through a custodial change or two during their career, and the custodians are vendors to them, providing a service, and I think in that type of relationship, you work for me, like I'm paying you a fee to do something, and they may take liberties with their tone or comments that they make in conversations and so forth. This is not that. They're literally joining your team. Like, they're talking to their future team members. Sometimes they lose sight of that. And so I agree with you. If it was a one-off instance, someone had a bad day, or that type of thing you can overlook. But if it's persistent, like you said, you've walked away from transactions over this. We've seen that too, where the buyer, in dealing with whether it's an owner or the employee who is presenting this consistent pattern of negative behavior, we get the call at Alaris, and it was like, hey, we're really considering walking. We either need to address this now or deals off. And so it's a very real thing, and they need to be aware of that.
It is. It's things you could do maybe when you're the boss and the CEO at a smaller firm just won't work when you're part of something bigger, right, that has bigger aspirations. So yeah.
So okay, final question is really on reverse diligence. Okay, so we're at a point, LOI. Clearly, you are going to be looking under the hood, running your diligence program, and so forth. Is it acceptable to you that the seller asks for similar things of you, like valuation reports, financials, things like that? Is that sort of standard in your world?
Yeah. No, we expect that. We usually, we use Deal Room as our repository for everything, right. And yeah, we fully expect that. And what I would say, Alan, is that it's more like bifurcated, right? So there's the quantitative stuff that if financials, they want to see financials, they want to see how levered the partner is, or they want to look at the operating agreements. They're going to take equity or things like that. So that's like the quantitative, and then there's like the qualitative, which is what is the vision for the firm? Getting deep into that. Where do you want to be in 3 to 5 or 10 years, and then ever-changing landscape. That's something that's really salient as well. And then it's also maybe talking to other sellers that had partnered with us, maybe 2 or 3. And, in working with you guys are great at probably, delineating everything along those lines. But yes, that's very real. We expect it, and they should. Honestly, if they didn't, I probably don't know if I'd want to.
Yeah, honestly, that's a great point. If they weren't kicking tires in the way you were, you question, their financial wherewithal and like so. But let me ask this question, because we've seen this as one of our unique kind of quirky things, is given the amount of data that's being requested of the seller, and again, by the time they're getting to LOI with you, we've probably been working with them for 2 to 3 months, just constantly getting data. So like they're tired of giving data, and understandably so. And so they want to do reverse diligence on you. And so like let me ask you how you would react to this. Let's say that you had a firm that signed an LOI with you, and then you gave them your normal set of due diligence information that you're requesting, and starting your other 2 legal and transition processes. But the seller said, hey, we're not giving you anything until you give us your this reverse diligence. What, just off the cuff, what would be your reaction to that?
I would probably ask some questions as to kind of why, what their issues are. Because sometimes, as you said before, there's a big emotional aspect to it. We've done 40 partnerships, so it's like we've got a track record, and and they've all gone well. So I'd probably want to dig deeper and to see, sometimes people say things. There's an emotional aspect to it, or there might be, what is the reason why you're saying that, and really kind of delve a little deeper there. It's come up, and I do agree. They get deal fatigue, right?
Yeah.
They've given Alaris a bunch of information. Now we're asking for some more things, and then they say, well, I want to ask some things of you as well. So if it's reasonable, we've always put it out there. But we have NDA signed, so we're not as worried. So we'll put things out there, but it's really at some point, Alan, is more just to say, why are you asking that, or what's
is there some kind of deeper rooted trust?
Yes.
Trust. I agree with you. I think your point on the reasonableness of what they're asking for is probably what you would weigh. But I would, in my position, would be like, again, the buyer is the one that is marshaling all the resources, spending all of the money to get to close. And therefore, I think it's perfectly fair for them to expect, given all that you're doing in that regard, that they're going to receive a certain amount of data and information to validate that this is indeed the caliber of partner we want. And we've done transactions with Savant. You're not hesitant at all to give reverse diligence. But it's just, if someone like dug their heels in a really with that kind of attitude, it would be to me, it would be a turnoff.
It is a turnoff. We have walked away. There was a deal that we were working on, and the seller was being very intransigent. Like we told them, this is collaborative. It has to be a win-win, and he just didn't want to. I would say we were trying to delve deeper and trying to to get a better place on some things, and really just was being intransigent and just kind of digging his heels in. And something he had said to me like a month before when we were talking, he knew a lot of the prominent people in our space, and from the different groups and CFP and NAPA and everything else. And he kind of always was saying like, yeah, I don't talk to them anymore. I don't do this. And I told one of the people on my team, I said, this is like the bad breaker upper from Seinfeld. And I said, that's going to be us if we don't, head this off at the pass. And we just kind of just walked at that point, even though we had spent a ton of money, a ton of, pulling team members to their office and doing things like that. It's just, it's the best deal you do is the ones you don't.
Well, kudos to you for pulling the plug on that, because you probably saved yourself a lot of headache and pain down the road. And that's something that we try to reinforce. There's this general like belief that buyers are just buying assets and revenue, and they care not about the cultural aspects of the transaction. And that couldn't be further from the truth. It's like you've built a family there, and these are real people. And you don't want to bring anyone into that family that's going to be a detractor from it. It's not that we have big egos in this industry. So like everyone has that for the most part, but there's a difference between that and being someone who's truly, a negative to the industry, to your company, and just detracts from the culture, just for whatever the reason is, trust issues, attitude problems, what have you. So, okay, well that answered my question. I'm glad you agree with our position. Well, I just want to tell you, thank you so much for your time in the buyer's boardroom. Great session. Appreciate everything you guys are doing in the industry, and we certainly look forward to bringing Savant culturally aligned partners in the future. So
yeah, no, listen, I appreciate it. I love paying forward anything like this, and listen, I love Alerus. You guys are a high quality company, and I've always thought that. So anytime.
All right, and we're back. That was a great interview with Patrick.
He's fantastic. He's a good sports guy like I am. His son plays football. My son played football. Both got concussed. So we have a lot of similarities. But great. He's a fun guy to talk to as well.
That's big. Well, good. Well, it's been a great episode. I know we do have a mailbag. What do you think? Shall we?
Let's go. Yeah.
Let's go. Okay. Hey, Jacqueline and Alan, I'm about to go under LOI with a private equity buyer. Okay, interesting. And I'm freaking out about sharing all my company's financials. How much is too much information to give before I know they're really serious?
I'll be interested in your answer to this, but my answer is if they're giving you an LOI, they are serious. They typically don't, and it's a private equity backer, so it's not a strategic acquirer or an integrator, as we call them. They are a financial investor in your business. And so it's a little bit different dynamic. But the mere fact that they're presenting you with a letter of intent is evidence of their seriousness. And I would say once you are under LOI, any financial data that they request is fair game. So you shouldn't be freaked out that you're going under LOI for the express purpose of getting into diligence, which was sharing all the financial information. So I wouldn't have an issue with that, but any comments that you would have?
Yeah, I guess I would lean towards giving it before the LOI. Presumably you're under an NDA. So if it's a confidentiality concern, should be protected there. Buyers can sometimes rush to get you under exclusivity when they're not really that serious and may not really understand your business yet. So I would almost force them reviewing it. Yeah.
So, no, you're raising a good point, and I neglected to mention that when sometimes we see when sellers are engaged buyers directly, they don't have an advisor in place. They will have talked to the buyer for a couple of weeks, maybe have given them a high-level set of data, and the buyer is immediately putting an LOI in front of them that has a valuation in it. But what's also in that LOI is a standstill provision, which is a normal provision, which means you cannot talk to anybody else for the length of the standstill. And the standstill is what, 60, 90 days typically? So what they're basically doing is eliminating the competition or the potential competition for that period of time to get in phase with you exclusively. But the thing to point out is they likely, because they got to the LOI so fast with a high level review of your information, that they're going to now take a deep dive. There's no way they're not getting under the hood in a granular fashion that they have not been able to do in a very short period of time. And I would expect so let's say in our transactions, very rarely do the valuations get adjusted to the downside post LOI. If anything, I've seen them go up quite a bit after a QOV or something like that. And that's because we've done all that granular work on the financials before the LOI. So that's what you were saying.
Yeah.
Let's give them financials because you are under NDA. Give them financials before so that we know whatever they're going to put in that LOI is actually bankable and accurate because they've done the work. The last thing you would want to do is go under LOI thinking you've agreed to one valuation, and then in diligence, they discover something that impairs the valuation, lowers it, and now you've spent all this time, to get to a point where you're not going to do a transaction because it doesn't meet your expectations. That's a good point. So if you're under it, the way, as I think about this question, is I'm ready to go under LOI and I'm freaking about sharing all my company's financials. Haven't you been doing that already?
Like, I have a lot of questions here. Yeah, I know. Yeah. Take your time to get there. I like when we were talking earlier about how the LOI, it's not binding. It's not. The standstill or exclusivity is, but it is also something that both sides will point to when there's something in there that's in their favor. So it's this pick and choose thing. And the more that you have in there, the more care that was taken to show the assumptions that went into the numbers it could work against you, but it could help you stick with your price post LOI, taking the time to get through there. So anyways, yeah, I like that one. Well, good. Well, another great episode.
Absolutely. I enjoyed it. Thank you so much. Looking forward to the next one.
See you soon.